What's good, y'all? So in this video, we're going to be going over futures versus Forex. If you're new to the channel, make sure you go ahead and subscribe. Also click that notification bell so you can be notified every time I upload one of these videos. So futures versus Forex. I get this question all the time, especially because on like Instagram, my futures profit, and people be wanting to know like what platform you're using, what's the difference between this and is it better and stuff like that. So I said I'm gonna go ahead and make this video to the best of my knowledge and what I experienced. Now, before we do that, I want to say I've actually been trading Forex for 4.5 years. It will be 5 years this year in September. I would say I made a lot of money in Forex, so I'm not just bashing Forex, but there were some things that made me question Forex. As long as I was getting paid out, I was cool. So let's jump into it. So they're similar but different. So I'm gonna read these with y'all. All right. Futures and Forex are both types of trading involving financial instruments, but they have some differences. Futures trading involves contracts to buy and sell assets at a predetermined price on a future date, while Forex involves buying and selling of currencies in the foreign exchange market. So futures is based off contracts, which we're going to get into. It's not like option trading where you can't exit, or you have an expiration date. It's not like that. It's literally just like Forex. We can get in and get out, but it's through contracts. All right. Also in Forex, you do have indices. All right. You do have crypto that you could trade, commodities like gold, silver, stuff like that in Forex. So it's not just currencies, but Forex is known for trading currency versus another currency. Example, USD versus the Great Britain pound, GBP USD, or USD CAD, the US dollar versus the Canadian dollar. Those are two currencies that are basically being traded against each other. So that's one of the differences, but they are similar because you can still trade US 30, NASDAQ, SPX on futures. But you can't trade regular pairs on futures. I did see like some type of Bitcoin asset that you can trade in futures. You can still trade gold, silver, stuff like that. Just do your research on it. But yeah, similar but different. But we're gonna keep going. All right. In Forex, you have brokers, spreads, all right, fees, slipperage. So let's jump into those. So in Forex, the broker is very important. All right, the broker is very important because this is where your money is going in and out from. All right, the actual broker. And the broker can come with high spreads, low spreads, no spreads, It just depends on how that broker decide to go about it. So the broker is kind of in control when it comes to your Forex account. All right. Spreads, basically, where you getting in at, how much the price is when you get in. So let's say you want to get in at an area of 1, 2, 3. All right, this is just an example. 1, 2, 3. They may put you in at 1, 2, 3, 4, 5, 6 instead of right there where you want to get in at because of the spread. All right. You also have fees. So if you want to hold a trade from different sessions, you may get caught up in swap fees. This is all determined by the broker. All right. Slipperage as well, determined by the broker. So slipperage, if you don't know what slipperage is, basically you could be in a trade, you can have a stop loss set, you can have a take profit set, and price can literally slip past both of those and don't even trigger them. So your account can still get blowed due to slipperage just because of news, like high impact news, or just you could just have a shitty broker and price can just literally slip right past your stop loss and you can lose way more than you intended to lose. So which leads to price can be manipulated, all right? Because most brokers are unregulated. And we're going to talk about regulation so you can definitely understand what regulation is. But just to sum it up, it's like rules that the government has put in place, which is not 100% safe when it comes to your funds if you are using an unregulated broker. I've seen people make over 100K not getting paid out, the money disappear. I never had that problem. All right. I always been paid out by unregulated brokers. Regulated brokers in the US do have shitty leverage, 1 to 50 leverage, where you can, but you can't really maximize your profits like you can with an unregulated broker. Hanko trade, I had put like $15 in the Hanko trade, no lie. I turned $15 into 5K. All right. And it was during March when the market was going crazy. So that's one of the things about unregulated brokers. You know, you can literally put a small deposit in to risk more with less. And that's not what the US want. All right. So they want to regulate things. Currently, we are witnessing brokers being removed from MT4, MT5. All right. Prop firms are removing US traders and or just shutting down for shady reasons. Forex has, you know, a good name and a bad name for itself. You see the good, you see the bad, but behind closed doors, you know, is it really all good? That's what you got to ask yourself. Let's talk about futures. In futures, it's automatically regulated. All right. So no manipulation, no spreads, centralized time. So everybody sees the same price. In Forex, I literally had two charts up one time with two different prop firms and two different brokers, and price was different. The counters were different. One counter was bigger than the other one. Broker had a couple wicks and a gap on one screen, and the other broker that have no gaps, no wicks, just a full counter. So I can definitely say in Forex, sometimes price and the candles look different, all right, depending on the broker. So it's centralized with, so here everybody see the same price, same candles, because it's centralized. Where you get in at, all right, is where you get in at. The same way when you get out. So what I mean by that is just like I spoke about in Forex, if you want to get at 1, 2, 3, all right, you're going to get in at 1, 2, 3. It's not going to put you in all the way at 1, 2, 3, 4, 5, 6. That's just an example. Where you get in at, guys, is literally where you get in at. And in Forex, most of the time when you do enter, you're going to be negative due to the spreads, due to, you know, some fees they may have for each trade that you take. In Forex. In futures, no, you're 9 times out of 10, you're going to be in profit. Okay. If you are in the right direction, it's going to automatically go ahead and profit because you in the market. Literally, you're in right there. You're not fighting against a broker. Not limited to one trading platform. Prop firm challenges and futures are way cheaper than Forex challenges. So back to the not limited to one trading platform. So in futures, you have Trade Station, Tradeovate, Ninja Trader, R Trader. You got a lot of different platforms that you can actually use. Versus Forex, the main platform is MetaQuotes, MT4, MT5. Of course, there are other things that have been created like C Trader, Trade Locker, other platforms. Like these brokers are creating their own platforms that you could trade on, which I don't trust 100%. Just because MT4, MT5 are removing those brokers for not being regulated. So when you come to futures, is automatically regulated. You don't have to worry about any of that stuff. So that's what I mean by trading platforms. All right. You can still use TradingView to mark up. I actually use TradingView now to enter my trades because that's what futures allow me to do, is connect the broker that I'm using to TradingView, and it's making it easier for me. Just a whole bunch of pros. Now there are a few cons, which I don't know all the cons. Like I say, I only been trading futures going on almost 3 months now. So one thing I would just say is margin requirements. Unlike Forex, like I said, last year in March, I was able to put in $15 and to turn that into $5,000. Versus in futures, there are margin requirements for you to trade certain things because it goes by contracts once again. So like $500 may be the minimum. I'm not sure. Don't quote me on that, but I know for a fact if you are trading US 30, NAS 100, XPX, which they do have different names in futures, but it's the same thing. You got to have a certain amount in your account in order to even trade it because of the contracts. It could set some people back who like to grow small accounts. $500 is still considered a small account. You have some that want to trade $100, $50 and want to grow it that way. I'm not sure if you can do that in futures. Minimum account I've seen is a $500 account. And then, of course, you can get funded. So that's that. The volatility is a little different from Forex, even though it's the same chart. We're going to get into how the volatility can be a little different just off of the movement. trading currency pairs. You know, you're not trading something that's slow when it comes to futures. So you have to be comfortable with volatility. So I say if you are trading indices, then this definitely could be a nice switch over for you because it's not going to be too much of a difference. But for someone who are scared of indices, then yeah, you're going to have to literally face your fears and get with it because the volatility is a little bit different from Forex. All right. Risk management. So when it comes to Forex, it's based off lot size, all right, and dollar amount. Futures is based off contracts. So I'm not going to do a futures contract breakdown. Just know that futures, you have to understand how much, you have to understand what you're trading and how much is value per tick, all right, which we're going to get into. Forex is based off the dollar amount. So $1 per $0.1 per pip and stuff like that. And then you can do your calculations that way. So the calculations is just a little bit different. But once you understand the contracts, to wrap. That leads me to movement. Forex is based off points and pips. Points if you trade in indices, pips if you're trading like currencies. You can still convert the points into pips no matter what. Futures is based off ticks, which all of this stuff means the same thing. So you don't have to get so you don't have to confuse yourself when it comes to futures about the ticks and this and that. It's literally the same thing. If you're going for 100 points in Forex, you can go for 100 ticks in futures and it'll literally equal the same thing. All of these terms and stuff really just sometimes be in the way. So, you know, it's nothing to too much worry about when it comes to the movement. Now, withdrawal process in Forex most of the time is Bitcoin or the cryptocurrencies. So like Ethereum, Litecoin and stuff, you can use other cryptocurrencies to actually get paid. Then you got to transfer that crypto into USD and then get into your bank account. So it sounds like a lot of steps there versus futures is just a straight bank transfer. All right. Or if you're using a prop firm, they might use like Wise or something like that. And once again, it's still easy for you to just transfer it into your bank account. I'm going to cancel out a lot of the processing fees and stuff like that. So as you can see, guys, it's not too much of a difference, but let's go over this right here. For those who don't know what regulation means, I want to say if you want to know anything, all you got to do is use your phone and your computer, and it will literally answer the question. So I get this question a lot. What is regulation? What does it mean? So just to break it down real quick, read this with y'all. What is a regulated market? A market which over government bodies or less commonly industry or labor groups exert level of oversight and control. Market regulation is often controlled by the government and involves determining who can enter the market and the prices they may charge. So like I say, guys, the U.S. is not playing around when it comes to regulation, all right? Because if you're using an unregulated broker, you're able to have more leverage. You're able to make more money with less, and they do not want that. So if you are paying attention to what's going on right now, most of the prop firms are not accepting you as clients. Most of the unregulated brokers that you were used to have been completely kicked off MT4, MT5, and you're not able to use it. Now, I do still have a Forex broker that is still allowing you as clients, and that's still on MT4, MT5. If I was to ever have to put some money into Forex and trade it again, then, you know, I still have a connection there. So it's not like you can't trade Forex at all. They're creating solutions with inside of the problem, but it's just, can you trust those solutions? If it's not on MT4, MT5, something that we all was introduced to in the beginning. All right. So like I say, MT4, MT5, metal quotes, it was the main source for traders. All right. Until they created other outlets, like I said, C Trader, Trade Locker, and just different things now they're creating. I've seen something new that they're creating and testing out as far as migrating other people's accounts. Guys, that's pretty much it when it comes down to it. Hopefully I broke it down to you in the best way possible. Futures is better in my opinion, and you don't have to worry about all of the manipulation and regulation and stuff like that. So if you like this type of content, don't forget to subscribe. Don't forget to click the notification bell. Other than that,